Hello, hello. Jamie Trull here, your favorite CPA and financial literacy coach. And today we're going to be talking about something a little bit different that I am not super well versed in. I'm actually really excited to learn along with you all. We're going to be talking about growing wealth through real estate. And so because I am not an expert on this at all, I have brought in one of my favorite people. She is also a CPA. She's also one of my preferred vendors. If you go over to my website, jamietrull.com, you can see a whole list of my preferred vendors, but Sheena is on there and she is fantastic. And Sheena is an expert in all things real estate. Okay. So when it comes to taxes around real estate and all the questions and how to do it the right way, right? Sheena is the person to go to. So I'm going to let you intro yourself as well, Sheena, and tell us a little bit about you.
Well, thank you. Happy to be here and share. I think real estate is just such a great way to get into, like you said, the wealth building. And it hasn't been that way, I have to admit, all that for myself. I've been a CPA since 2009, worked at public accounting firms, and I just kept seeing the clients that were making the good money and drove the fancy cars and kind of seemed to have it all. Basically, there was this common theme that they had real estate on their tax returns. They were rentals or realtors or involved in some way. And so it really piqued my interest. And honestly, that was back right after getting my CPA in 2009. We all know like the crash. And so I kind of just put it on the back burner because I got turned down with banks and everything going through their own crisis. So I have been pretty new to investing and have really been building that up. I've flipped a couple of houses. I have just bought a oceanfront condo in Florida, and I just got a house long-term rented out. So I'm in the trenches learning it, and I'm putting in the great advantages that we're going to talk about to make it work for my clients as well, to help grow that wealth and pay less to Uncle Sam, because that's hard-earned money, and we're going into a hard time, and so just trying to keep more of it.
Yeah, and I think it's a really great thing that you're doing what you also are helping clients with, right? Because I think that sometimes that can be one of the biggest challenges when people partner with an accountant is they don't necessarily understand their business, right? Or, what like the specifics are. And real estate is one that has a lot of specifics. So not every CPA is going to be well-versed and be able to help you and save you the most taxes and set things up the right way as someone who really knows this stuff. And Sheena has to know it because she's also right there along with you doing it. So I teach business finances, right? Mm-hmm. And it really is helpful because I am also a business owner myself. So I can speak to, the cash flow concerns, payroll, all of the things that a normal business owner speaks to. So I think that that's a really great thing that you're out there kind of living it and learning the lessons yourself that you can then pass on and use with your clients. And I love that area because you're so right. Like, I do feel like so many of the people that are out there and, are making lots of money, they have multiple streams of income. And one of them is oftentimes real estate. And it's something I have thought about. I haven't gotten into it yet. I keep waiting for the market, right? Like, so that's, I think, what a lot of people are like, when's it going to be a good time? Because it feels like, prices are high right now. So when should I jump into this? Mm-hmm. So I think that, we're going to talk a little bit about some things to think about, right? With regards, if you're thinking about doing rentals at all, Sheena's going to give some information about building wealth with real estate. So the first question I'm going to ask you, right, is we've talked a little bit about you have a condo now in Florida, and that's a short-term rental, right?
Yes, it is.
Yeah. So that's, short-term rentals being things like Airbnb, typically like the shorter under 7 days, right?
Correct.
7 days and under. Yep. Mm-hmm. And tell us a little bit about some of the tax benefits, tax kind of loopholes, if you will. People love to hear about loopholes. So the tax benefits of short-term rentals right now.
Yeah. Yeah, that loophole word makes me cringe because it makes it feel illegal. But hey, when it's legal and they left a loophole for us,
Yep.
we're going to take advantage of it. And it's one that, so we're now at end of June 2022, and this is the last full year for 100% bonus depreciation, which is a huge benefit. And in short-term rentals, there is the loophole you're referring to where you can have a W-2 job, you can be self-employed, you can not be a real estate professional, which is a status that's a requirement for long-term rentals to take advantage of this depreciation benefit. And so on short term, you just have to materially participate. And so there's some rules on that, and we'll not bog down the audience with that because it gets detailed, but that's the big thing. Participate, and you can still have your other job and other things going on and take advantage of bonus depreciation, which is something that we get a cost segregation study on to figure out the components of a building. So we'll use my condo, for example. I'm going to be going through this myself. I've talked to the cost segregation study expert. They're going to look at my condo, the price I paid for it, and allocate what amount to land, which even for a condo, there's a small part that's land attributed. And then they're going to break out the components of like the structure of it, and then the smaller appliances and flooring, anything that's 15 years or less. And we can bonus depreciate that, which could be, depending on the price of the property, hundreds of thousands of dollars, that then the best benefit, you can write that off against your other income. Like if you had your W-2 job or you're self-employed and say you're a consultant, you can write that off against that. So it's an awesome benefit, and it starts phasing out starting next year. And so the time is now, if you've gotten into that hot market of short-term rentals, to take advantage of it, really.
Yeah. And that bonus depreciation, right? Basically, I mean, I know we're saying a lot of words. People are like, okay, bonus depreciation, cost segregation study, right? Like they're like, that sounds like a lot. But really all it is trying to value the property and the different parts of the property, and then allowing you to basically take a portion of that cost in the current year, right? That's a bonus depreciation. Basically, instead of having to spread it out over lots of years, right, you can take more of it up front, which is usually, something that's desirable for people for, various different reasons. But it's really nice that you can then offset that against your W-2 income as well. So, that can lower your total tax burden, right?
Yes. Yeah. And we're wanting to do that as what I would call or refer to as a paper loss with depreciation. And like you exactly said. So, for example, that 15-year property or asset item in your building, you have to then depreciate it over 15 years. So that, say it's $15,000 to make things easy. It's $1,000 a year versus bonus, which lets you take $15,000 this year. And getting that loss to write off against your W-2 income or your other business self-employed income helps create a loss. So reducing your taxes in the overall tax liability. And that's really important. And I have to throw in a little caveat too, I was thinking about as well, is we want to be careful as investors, especially if you're self-employed, you're not taking every deduction in your business, because then you go to the bank and you're not lendable because you have this low net income. So instead, let's not try to expense everything so you look lendable and you can buy more properties, but use depreciation, which is technically, like I referred to, as a paper loss, because it's not an expense going out the door per se, that you're writing a check for. And then you're kind of win both sides.
Yeah, I love that. So you're not kind of, and I talk about this a lot, where people will, try to get every single deduction, which I do think if you have legitimate deductions, you want to take them, right? That's important. But you don't want to go crazy trying to make everything, fit like a square peg in a round hole, trying to make things into deductions, or spending additional money in order to have more deductions, even worse, right? because what you are doing is for lending, if you go to buy real estate, it's going to be harder because you can't demonstrate, the amount of profit that you have. That's ultimately, akin to your paycheck, right?
Yeah.
So you want to be a little bit careful with that, because I know a lot of people try to save taxes and then over time can't get the real estate, the loans they want, either for their own, home mortgage or for investment property. So for business owners, that is important to know. But I love the fact that, like you said, this bonus depreciation, you can reduce your tax burden without it impacting that, right? Like, so they're going to see that as separate. That's not going to be a bad thing to lenders. Now they're going to take into account, right, what other properties and mortgages you may have, but the loss that creates isn't going to be something that is going to be a problem from an income perspective, right, for borrowers.
Yeah, because a lender that is familiar with it, and most of them know to back out depreciation because it's not cash going out the door. Right. Now, you had some cash going out the door to buy the asset.
Yeah.
But it's not going out the door as far as that large 100,000 or more that we could create with the cost segregation study leading to bonus depreciation.
Yeah.
And I've taken clients where we run their scenario without it, and they're owing upwards of $50,000 just to the IRS. And I've brought that to a complete refund for them, turned it completely around with this bonus depreciation. And so it's a great tool. And a lot of CPAs are not familiar with it because real estate isn't their specialty. And there's so many nuances with it that they just aren't sure, and they're not familiar, and they don't want to do it. And I don't blame them. It took a lot of searching for me to understand and go, okay, I see the benefit. I'm comfortable with it. And hey, I'm going to do it myself. So I'm going to talk my clients through it too.
Well, and I think a lot of the reason that people who want to do it, right? Because I don't know that I've ever talked to a person that's not interested in either today or someday getting into real estate investing. Like, I think that's a really attractive, this idea of like more passive income. I don't believe in fully passive income, but like fairly passive income, right? Coming in that you don't have to do anything day to day. Like, that's the dream, right? Well, we can go work our jobs or a business or sit on a beach. Who knows, right? It just gives you that financial freedom. But I feel like a lot of the reason that people hold back is because they don't know how to do it the right way. They're like worried about, I think having somebody like an advisor, specifically from a tax accounting perspective, to understand here's the best way to do this, to be able to give them the advice to make sure that they're going into it eyes wide open. They know how to structure it to be best for them, right? I just feel like there's so much confidence you would get. And it is hard to find somebody with this knowledge, which is why I'm really excited to kind of show you to our community for people who are in this boat thinking about this. Sheena, I've got her information. We're going to post it down below for her website to book a consult with her, because I think that can give you that confidence that you need to maybe do something that you've been dreaming of doing, right, Sheena?
Yeah, exactly. And that's why I went self-employed, started Growth Advisors and tax consultants, because I kept working. I was at firms where we didn't take the time to get to know the client. You just dropped off your taxes and you picked them up, and you really didn't know much else after that. So I love to get to know my clients. And like, if you were ready to buy your short-term rental, we would sit down, talk about your goals. I'd love to talk about the long-term perspective, how to make it in a place you'd want to go visit, because then you get a write-off of vacation. I help you plan those all out of cash flow. I had a client call me last night. She's getting ready to make a offer on her new primary residence, and we're talking through how that offer needs to be written up. So I'm there to walk you through it because I've done it myself, and I come from the CPA, knowing the numbers. And that's, I think, what's the scariest is you can go through and analyze things. You can look at the numbers, you can see some cash flow, but it's running it for your particular situation and what it would do as far as tax savings. And then can we make this work, and really what income it would generate. And I think I'm a bit of a risk taker when I decided to jump in and buy a condo across the country, but I'm getting cash flow in. I'm sending little messages to welcome my guests, coordinate a housekeeper, maybe 15 minutes a day right now. And yeah, I'm renting it out and seeing that residual income. So it's easier than you think, but you put the plans in place, starting with today, for sure.
Yeah, exactly. Starting with watching this video. I mean, I think that's exactly true. Like once you kind of get the ball, the hardest thing is always from the starting line, right? Like just to get past the starting line, like is the hardest thing because it's so intimidating, all the things. So having people that you can trust that can help you through the process is really helpful. And I think an important thing too to mention about you, Sheena, is you don't just do this, right? So you do like if somebody is wanting to do real estate, but also maybe they have a business, right? Maybe obviously they probably have personal taxes of some sort. That's something that you can help them with as well, right?
Yeah, because they really go hand in hand to see the benefit. And we don't just look at it from the tax perspective, because we never want to make a decision fully for the tax purposes or tax reasons. There's more to it. It's a big part of it for planning, for sure. But yeah, my focus is in real estate industry, construction workers, flippers, realtors on that realm, or wanting to get into it and switch from your W-2 job, creating it. That's who I help to make those steps and to see that it is possible and what needs to be done. I've got a client they're looking at how do they get more financially free. And so we're laying out the groundwork and what's their 5-year plan. And we work backwards and like, okay, if you do this today and you need to sell this property to get one that's generating more income so that you've got that cash flow to replace your job. And we start seeing the numbers and see that it makes sense. They can make it their 5-year plan can come to a year or less. And that's the cool part. And I love getting to know my clients that way.
I absolutely love that because oftentimes it works the opposite. Like our 5-year plan becomes our 10-year plan. We call it the rolling 5, right? So it's always 5 years, like, 5 years from now. And then when you ask me 2 years, it'll be 5 years from now. Like, no, we need to move it up, right? We need to move it up. And I love the point that you made too about, it's not just about taxes, right? Like taxes is important, but I'm always a big fan too of don't let the tail wag the dog, right? We need to look at like, does this make sense holistically from an income perspective? Is this going to make sense? Right. And then factor in taxes as well when you're looking at it. But typically, if you're going to buy real estate, you don't want to just do it for the tax benefits. You want to use the tax benefits to your, you want to be aware of them, to use them to your advantage. So you don't pay more than you need to. But usually you're going to buy it for income reasons or because it makes sense for you and for your lifestyle. And I love that Sheena kind of, you're looking at it from all angles, not just the siloed, here's what it's going to do for your taxes. Is this a good decision for you? Right.
Yeah. Well, and it's so great to have a sounding board. As I have to say, I feel it myself a bit where you feel like maybe you're the only one in your family or your group or your circle of friends that are interested, and maybe you're getting questions from others. So when you have someone coming from an expert financial perspective, but also outside of that and can say, okay, let's look at the numbers. You're not crazy. You're not alone. If this is the goal, then this is how we can make it happen. And that's really what I want to do and work through. And it makes taxes, it makes the accounting side of it so much more enjoyable, and that planning piece.
Well, yeah, because you're helping people also reach their dreams too, right? And it moves it from being just like this like total leap of faith, which I'm a fan of a leap of faith every now and again, but like you make a leap of faith, but then also get some data. Like let's put some numbers to that and just make sure like we have like a soft landing just in case the leap of faith like doesn't work out, right?
Yeah.
So I think that's where it's really helpful to kind of mirror that like leap of faith mentality of like, let's do this thing with the numbers that support that it is a good idea, that it's something good financially for you, because it is a risk. Like that's the biggest thing. It's like jumping into something like that is a risk. We don't ever know what's going to happen with the real estate market. Nothing is ever, set in stone. And so I think that risk can be really scary, but the more you plan, you realize it's various different scenarios that you run, right? And when you understand like, okay, these are the scenarios in front of me, it's easier to take risks because they don't feel as like, totally black box in the dark,
Yeah. Yeah, you have to have the level of, okay, I'm going to do this, because that's where a lot of people get stuck, is analysis paralysis per se, where they're seeing it, but then they don't know the next step.
Yes.
And I have to say too, a shout out, because we met through your Facebook group, your Financial Literacy group, and I met a client that turned out to be my realtor to buy that condo in Florida. We did a lot of discussions. I met her for the first time when I flew down to sign. And it's just that power of networking. It's surrounding yourself with people who've done it, because they look at it a different ways. I learned a lot of lessons. I thought I knew a lot. I learned so many more, made a lot of mistakes, but that's also why I'm passionate about sharing, is because if I can save you from making that mistake, because I went through it, and you get there that much faster, I'm helping you. And just like I was helping my client through her taxes, was she helped me through making all my mistakes first time buying a condo.
Yeah.
And I just love that. It's the connections, and it's putting yourself around those people to really build you up.
Absolutely. Yeah. I mean, I'm a huge fan. You know this about me, Sheena, but that's part of the reason, we built out the preferred vendors program, because I don't offer services. I am all fully education based, which I love and want to continue to be. But I also know that people need to partner, like they are looking for that one-to-one service in a lot of cases that my company doesn't provide. And so that's why when we found, people like Sheena, and our other preferred vendors, it just made sense, like the synergy there, to say, hey, I want to put you up on the platform and show you to other people so that you can help people who are going through, what you're an expert in. That again, I am not. So don't come to me asking me to help you with your real estate purchase, because I'm going to send you to Sheena.
Yeah, I'd love to help and walk through scenarios. I get so passionate about it, because there's so many opportunities. So yeah. It's great.
100%. And I'm trying to see if I can put up a comment. I don't think it'll let me. I was going to try to put up your website, but it will be linked down below, but I'll just give it to you. It's growthadvisors/tax.com, right, Sheena?
Yeah, tax.
Yeah, like a dash.
Yes.
So we will link that down below, so you can go check out Sheena's website, see what she offers, book a call with her. I highly suggest it, because she might get booked up now. So if you're watching this, you want to jump on it. Anything else you want to tell people about building real estate wealth, or any other quick tips that you have that you wanted to share?
I would just say, if you've been on the fence and you're thinking about it, it's middle of the year, and what if this time next year you could have made those goals and dreams a reality by working with me and putting those plans in place? That's what I kind of keep telling myself, and I think it's just like, take the action now, put those baby steps in place, and it will become a reality, and you can be getting that separate or an additional set of income or additional stream. And because we're going into a challenging economy, and it's very all over the place, inflation. And I think we have to think about, how do we plan and cover for that? And I think real estate is a great way to build the wealth, generational wealth. You can build them and continually pass off that income to children, grandchildren along the way. There's just so much opportunity.
All right, Sheena. Well, thank you so much for coming on. I'm so glad to have you. It's always a pleasure. I'm sure you will be back. And everybody, make sure to reach out to Sheena. Give us some love in the comments. Make sure you subscribe. If you're watching this in the month of July, I got to do a quick plug as well. We are doing a giveaway. So we are really trying to grow our YouTube channel. We're giving a giveaway of $1,000 grand prize, y'all. Okay. $1,000 grand prize. We've never done this before. It's just during the month of July 2022. So if you're watching this later, sorry, you probably missed it. But you can still go to jamietrull.com/giveaway and see what's out there. But that's where you're going to enter. So jamietrull.com/giveaway. You're going to be able to get entries for various different things. But the main thing we ask you to do is just to support another small business owner. One action you can take to do that is maybe booking a call with Sheena. That would be one way to do it. But any way that you support a small business owner, you will get 2 entries. We just ask you to tell us what you did or what what you plan to do. And then there are ways you can get other entries, like subscribing to this channel, joining the Facebook group that Sheena mentioned, subscribing to our newsletter if you want to get some additional entries. But you can check out all of that at jamietrull.com/giveaway. And I'm really excited to give away our first $1,000 in cash. We were trying to find a really cool prize, but we were like, you know what? Let's do some cash and then they can use it towards their real estate investing.
For sure. I love that. That's exciting.
Yeah, we're excited about it. So check it out. And thanks again, Sheena, for coming. And we'll see you next time, everybody. Bye for now.